Preparing for a financial analyst at Nationwide interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Tell me about yourself and why you want to work as a financial analyst at Nationwide. I combine strong accounting fundamentals with practical experience analyzing data, building Excel models, and presenting conclusions clearly. Nationwide interests me because its businesses require disciplined analysis of profitability, risk, customer needs, and long-term capital decisions. In a recent project, I compared actual results with budget, investigated variances, and recommended operating improvements. I enjoy turning detailed information into decisions, and I would bring that same curiosity, accuracy, and collaborative mindset to Nationwide's finance team. While answering, connect your education and analytical experience to financial planning, reporting, forecasting, and Nationwide's insurance and financial services businesses. Explain your motivation, relevant tools, and the measurable value you could bring. Question 2. Why Nationwide? Nationwide appeals to me for 3 reasons. First, its diversified insurance and financial services platform creates meaningful analytical variety. Second, the company's mutual heritage reinforces a long-term focus on members and policyholders rather than purely short-term results. Finally, the role would let me apply financial analysis to real decisions involving pricing, claims, investments, expenses, and capital. I want to work somewhere rigorous, collaborative, and purpose-driven, and Nationwide's business model aligns well with those priorities. Make sure to cover Nationwide's diversified insurance and financial services platform, mutual company heritage, customer focus, reputation, and the opportunity to analyze decisions involving growth, profitability, risk, and long-term value. Question 3. What does a financial analyst do in an insurance company? A financial analyst helps management understand performance and make better decisions. In an insurance company, that can include budgeting premiums and expenses, analyzing claims development, monitoring investment income, explaining actual versus plan variances, and forecasting capital needs. The role is not just producing reports, it is validating data, identifying business drivers, and communicating implications. I would also partner with underwriting, claims, actuarial, and operations teams because financial results reflect decisions made across the organization. In your answer, talk about budgeting, forecasting, variance analysis, management reporting, profitability, claims and premium trends, investment results, controls, and translating findings into recommendations for business leaders. Question 4. Walk me through how you would build an annual budget. I would begin with reliable historical actuals and identify the major revenue, claims, staffing, technology, and operating cost drivers. Next, I would gather assumptions from business partners, such as policy growth, retention, inflation, salary increases, and planned investments. I would build the budget by line item, test base, upside and downside scenarios, and reconcile totals to strategic targets. After approval, I would establish monthly variance reporting so assumptions can be updated as conditions change. Be sure to mention historical actuals, business assumptions, volume and rate drivers, department input, scenario analysis, review cycles, documentation, approval, and ongoing comparison of actual results against the approved budget. Question 5. How do you perform variance analysis? I start by confirming that actual and budget data use the same definitions, periods, and cost centers. Then I quantify the variance and break it into understandable drivers, such as volume, rate, mix, timing, foreign exchange, or one-time items. I speak with the relevant business owner to validate the explanation rather than assuming from the numbers alone. Finally, I summarize the financial impact, expected duration, and recommended forecasting or corrective action. Focus on separating price, volume, mix, timing, and one-time effects, quantifying material variances, validating source data, consulting business owners, and explaining whether the issue is temporary, structural, favorable, or unfavorable. Question 6. What financial statements would you analyze, and how are they connected? I would analyze all three statements together. The income statement shows revenue, expenses, and profitability. The balance sheet shows assets, liabilities, and equity at a point in time, and the cash flow statement explains changes in cash. Net income flows into retained earnings, while non-cash expenses such as depreciation are adjusted in operating cash flow. For an insurer, I would also examine reserves, invested assets, premiums receivable, and policyholder obligations because those balances drive liquidity and capital. Make sure to explain the income statement, balance sheet, and cash flow statement, including how net income affects equity, non-cash items affect cash flow, and balance sheet movements explain liquidity and financial position. Question 7. Which financial metrics would you monitor at Nationwide? The right metrics depend on the business unit, but I would monitor premium growth, retention, claim frequency and severity, expense ratio, loss ratio, and combined ratio for insurance operations. I would also track investment income, operating cash flow, return on equity, forecast accuracy, and capital or liquidity measures. I would avoid viewing any metric in isolation. For example, rapid premium growth may look attractive, but deteriorating loss experience could make that growth unprofitable. In your answer, mention revenue and earnings trends, expense ratio, loss ratio, combined ratio, premium growth, retention, investment income, operating cash flow, return measures, and risk or capital indicators. Question 8. What is the combined ratio, and why is it important? The combined ratio measures underwriting performance by adding the loss ratio and expense ratio. A result below 100% generally indicates an underwriting profit, while a result above 100% indicates an underwriting loss before investment income. I would use it to assess whether premiums adequately compensate for claims and operating costs, while also examining trends, catastrophe effects, reserve changes, and business mix. An insurer can still earn overall profit with a ratio above 100% if investment income is strong. Be sure to define the combined ratio as loss ratio plus expense ratio, explain underwriting profitability, distinguish ratios below and above 100%, and note that investment income can affect overall insurer profitability. Question 9. How would you forecast revenue for an insurance business? I would forecast revenue using operational drivers rather than applying a simple growth percentage. I would model beginning policies or exposures, new business, renewals, cancellations, pricing changes, and product mix, then translate those assumptions into written and earned premiums. I would incorporate seasonality and known market or regulatory factors, validate assumptions with underwriting and sales teams, and compare outputs with historical relationships. Monthly actual versus forecast reviews would help identify emerging changes and improve the model. Focus on exposure or policy counts, new business, retention, pricing, cancellations, product mix, seasonality, and management assumptions. Explain how you would validate the model against historical trends and actual results. Question 10. How would you analyze an unfavorable increase in claims expense? I would first determine whether the increase reflects claim frequency, claim severity, exposure growth, catastrophe activity, reserve development, or timing. I would compare actual results with prior periods and plan, segment by product, geography, and cause of loss, and confirm data completeness. Inflation, litigation, repair costs, and changes in case reserves could explain severity. After identifying the driver, I would quantify the forecast impact and recommend pricing, underwriting, claims, or reserve actions. In your answer, discuss frequency, severity, catastrophe versus non-catastrophe claims, reserve development, exposure growth, inflation, reinsurance, data validation, and recommended actions based on the root cause. Question 11. Explain the difference between accrual accounting and cash accounting. Accrual accounting records revenue when earned and expenses when incurred, while cash accounting records activity when money is received or paid. Financial reporting generally uses accrual accounting because it better matches economic performance with the period generating it. For example, an insurer may recognize earned premium over the policy period even if cash was collected earlier. Similarly, claims expenses may be recognized as obligations develop before settlement cash is paid. That distinction improves analysis of profitability and obligations. Make sure to explain that accrual accounting records economic activity when earned or incurred, while cash accounting records transactions when cash moves. Connect the distinction to insurance premiums, claims, receivables, and payables. Question 12. How would you build a financial model in Excel? I would start by defining the decision the model must support and mapping the required inputs. I typically separate historical data, assumptions, calculations, and outputs into clearly labeled sections. I use consistent formulas, transparent drivers, and checks for balance, missing data, and unusual changes. I would include base, upside, and downside scenarios when useful, document key assumptions, and test the model with known results. Before sharing it, I would review formulas independently and make the output easy to interpret. Be sure to mention clearly separated inputs, calculations, outputs, consistent formulas, historical and forecast periods, checks, scenario controls, documentation, and review procedures that reduce errors and improve usability. Question 13. Which Excel functions and tools do you use most often? I regularly use SUMIFs, XLOOKUP, index match, if statements, date functions, pivot tables, and conditional formatting. I use pivot tables to summarize large datasets, lookups to connect supporting schedules, and charts to communicate trends. I also build validation checks and use filters to investigate exceptions. When a process repeats, I consider Power Query or light automation, but I prioritize transparency and maintainability. The objective is not sophisticated formulas, it is producing reliable analysis efficiently. In your answer, mention SUMIFs, XLOOKUP or index match, if logic, pivot tables, charts, conditional formatting, data validation, and basic automation. Emphasize accuracy, structure, and explaining results rather than listing functions. Question 14. Tell me about a time you found an error in financial data. During a monthly reporting project, I noticed a department's expense trend was unusually high compared with both budget and the prior month. I traced the detail to a duplicated vendor file loaded during a data refresh. I reconciled the source records, confirmed the issue with accounting, corrected the report, and documented the adjustment. I then added a duplicate check control to the process. The experience reinforced that analytical judgment includes challenging results that do not make operational sense. Focus on the situation, how you detected the inconsistency, steps taken to investigate and correct it, communication with stakeholders, control improvement, and the measurable impact of your response. Question 15. How do you ensure accuracy when working with large datasets? I use a repeatable control process. First, I confirm the source, reporting period, definitions, and completeness of the data. Then I reconcile totals to an independent system or control report, test for duplicates and missing values, and perform reasonableness checks against historical patterns. I preserve the original file, document transformations, and use clear version control. For important outputs, I ask another person to review formulas and conclusions. These steps reduce both major errors and recurring small inaccuracies. Be sure to mention source validation, reconciliations, control totals, reasonableness checks, duplicate testing, version control, documentation, and independent review. Explain how you prioritize materiality without ignoring small recurring errors. Question 16. Describe a time you had to explain complex financial information to a non-finance audience. I once presented a budget variance to an operations group that did not work with accounting terminology. Instead of leading with account classifications, I explained that overtime and contractor costs were exceeding plan because demand had shifted toward a specific service. I used a simple chart, quantified the annualized impact, and offered 2 staffing scenarios. I paused for questions and confirmed the operational assumptions afterward. The discussion led to a revised forecast and a more practical staffing plan. In your answer, emphasize tailoring the message to the audience, leading with the business implication, simplifying terminology, using concise visuals, checking understanding, and connecting the analysis to an actionable decision. Question 17. How do you prioritize multiple deadlines? I prioritize by deadline, business impact, dependencies, and the consequences of delay. I break larger assignments into milestones, identify information needed from others, and schedule time for review rather than using every minute for preparation. If two priorities conflict, I clarify expectations with my manager early and explain the trade-offs. I maintain a visible task list and communicate progress proactively. That approach helps me remain responsive without sacrificing accuracy in important financial reporting. Make sure to cover urgency, business impact, dependencies, reporting deadlines, stakeholder communication, task breakdown, quality controls, and escalation when conflicting priorities cannot be resolved independently. Question 18. What would you do if a business partner challenged your analysis? I would treat the challenge as an opportunity to improve the analysis, not as a personal disagreement. I would listen carefully, restate the concern, and review the underlying data, definitions, timing, and assumptions together. If the partner provides new information, I would update the analysis and explain the impact. If the data still supports my conclusion, I would present the evidence respectfully and document the rationale. The goal is a trusted answer, not winning an argument. Focus on listening, checking definitions and assumptions, separating facts from interpretation, testing alternative explanations, remaining professional, and escalating only after collaborative validation and clear documentation. Question 19. How do interest rates affect an insurer's financial performance? Interest rates affect both an insurer's investment portfolio and its liabilities. Higher rates can increase prospective investment income as bonds mature and are reinvested, but they can reduce the market value of existing fixed income assets. The impact depends on duration, accounting treatment, and capital requirements. Rates can also influence policyholder behavior, discounting, borrowing costs, and demand. I would therefore separate immediate valuation effects from longer-term earnings benefits and assess the business unit's asset liability profile. In your answer, discuss investment income, bond valuations, duration, reinvestment risk, policyholder behavior, discount rates, claims economics, and the difference between short-term market effects and longer-term earnings implications. Question 20. What questions would you ask us at the end of the interview? I would ask how success is measured for this analyst during the first 6 and 12 months, which reports or forecasts are most critical, and how the team partners with actuarial, underwriting, claims, and operations. I would also ask about current data or process improvement priorities, the systems used for planning and reporting, and development opportunities. Finally, I would ask what distinguishes analysts who become trusted business partners at Nationwide. Those questions show I am focused on performance and contribution. Be sure to ask about success measures, first-year priorities, team collaboration, reporting cycles, technology, development, and current analytical challenges. Questions should demonstrate preparation and genuine interest in contributing. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.